and Rajesh Pal, we are the Head Technicals and Derivative Research at Axis Securities, are joining us. Good afternoon, gentlemen. Thank you so much for joining us today. Rajesh, right off the bat, let me come to you first. I mean, what a day in the market. I mean, what a week in the market. We have managed to scale those 1 month highs in Nifty Bank. The broader markets are looking so good, and what a comeback by the small caps. But really, tell us, we have now managed to, cross the psychological levels of 23,000. From here on, can one really be hopeful that the bulls are back in action? What are the levels that you're penciling in as far as the benchmark indices are concerned and as far as Nifty Bank is concerned?
So it's a super green week for the market. All sectors have closed in the green, and most of the sectors have able to gain almost more than 5% throughout the week. Nifty itself managed to gain almost around 4% for the week. Looking at the overall sectorial behavior as well as the indices, we believe that this traction can extend further, and possible rally towards 23,600, 23,800 we may witness in the coming week or in the next coming weeks for the Nifty. As the long short ratio is also, if we look at the FI's long short ratio, that has also shown some bit of short covering. So that is also adding up some bit of relief in the market. Nifty managed to cross its major call concentration area of 23,000. Nifty able to close this week above 50-day moving average. So these are all adding up the bullishness for the near term as well as for the short term. And we expect that till Nifty is holding about 23,100, rally can extend to 23,600 to 23,800 on the higher side. Bank Nifty has shown very strong rally throughout the week. The way Bank Nifty now managed to cross 50-day as well as the 100-day moving average in this week, and most of the banking stocks have shown good traction in terms of buying. So we are bullish on the Bank Nifty also, and we expect that this rally can extend towards 51,000 for the Bank Nifty in the coming week. So here also we are holding bullish view with stop loss of 50,200. Target is 51,000 for the coming week.
Thanks for that view, and once again welcome to the show. Always a pleasure speaking with you, and likewise for you, Mr. Bagga, as well. Thanks so much for joining us. Want to understand what your outlook is for the the week or a couple of weeks going ahead. We've seen a very good trading week and a trading month coming in. Next week could be rather stable, but after that, 2nd April is when Trump's tariffs come into action. So what's your outlook? Do you believe that we're completely out of the woods and something like a tariff cannot affect us going ahead, and now the markets are one way up, or do you still believe that some more volatility is in room for us?
Yeah, global markets are really flying into uncharted territory as far as April 2nd goes. We don't know how broad the tariffs will be and how deep the tariffs will be. So overall, there is a lot of pressure on the Trump administration, both in terms of consumer sentiment as well as business sentiment, as well as governments working behind the stage, trying to get some kind of an agreement done before tariffs are levied. One example being Europe yesterday deciding that they will not levy their tariffs till 1st April, and most of their tariffs they are postponed till 13th April to give some chance for negotiation. So April 2nd remains a very big source of uncertainty for markets. India, we have seen domestic, the domestic criteria improving very fast, both the macro, the fiscal, as well as the monetary policy, where RBI has cut rates, has injected huge amounts of liquidity, and has done microprudential easing as well. So we have seen heavy lifting happening in India. We are probably bottomed out as far as the economy goes by September, and we are probably near the bottom or bottomed out already in December as far as corporate earnings go. So domestically, we were well positioned for a bounce back. The issue was the global issues, and those remain. So I think it will be difficult to have a one-way market. You will probably have some selling happening going into 2nd April, unless there is a US team which is coming over next week for further negotiations. Unless India announces that all tariffs are on hold till the bilateral trade agreement is signed in this autumn. If some news like that come, then you could have a huge relief rally in India. So that's why we have been telling investors to stay invested and not sell in desperation, even when the markets went down to 21,800 and lower levels.
Mr. Bagga, I'll stay with you then. A couple of things that are happening that perhaps will work out for the better as far as India is concerned, whether it is, bottoming out of the market, bottoming out of the earnings, or whether it is the cooling off of the dollar index, which is, of course, being a very big positive for all the emerging markets, especially India. So going ahead, do you see better days ahead? And also now that, once again, the bulls that are likely to take in charge, there will be a sectoral churn once this dust settles. What are the sectors that you see leading from the front? Do you see value in the banking and the financial pack, because they have been doing pretty well? Also, the valuations look very, very ripe for the banking pack. So do you see value in the banking pack, or what, according to you, is the sector that will be leading the charge here on?
I think banks, industrials, power, these are some of the sectors which will lead the charge. IT is watching from the sidelines. So IT, maybe it's a couple of quarters more before we start seeing the AI applications making a dent on delivering more top line growth for IT. I think we are probably a couple of quarters away from that. But moment there is some policy certainty, some policy stability in terms of the Trump administration, you will see IT starting to rally. So it might be a good time to nibble into IT, but the sectors leading will be financials. Within financials, private sector banks leading private sector banks, then industrials, and then energy. Mostly power. I think anything related to power should do well. Defense is coming back. We have seen defense stocks doing very well over the last 1 month, and maybe that also points to public sector companies coming in as value buys, given the sharp corrections that they have seen. So maybe the PSU as a sector are coming into its own once more, given the sharp corrections that have happened.
Okay, thanks for that view coming in, Mr. Bagga. Rajesh, coming to you, can't help but notice the kind of move that we've seen over the week. You have a 4.3% uptick in Nifty. Nifty Midcap is up 7.8% and small cap has outperformed the entire market. It's up 8.7%. With this kind of move coming in over this week where the bulls have been active and in charge, do you believe that it's the SMIDs once again that will be leading the rally from the front? Although a couple of analysts that we have, in fact more than a couple of analysts that we have chatted with and interacted with, all of them are recommending large caps. But we're seeing this kind of momentum once again build up in the broader end of the market. Which sector of this market do you believe it's going to be the benchmarks, or it's going to be the broader end that are going to be leading this rally, if at all we are expecting a rally for the next couple of weeks?
So I think the way Nifty Midcap as well as small cap space have shown the strength in the current week, I think yes, there is a possibility that midcap and small cap can outperform further, as the benchmark indices are comfortably holding above 50-day moving average. So that's giving the confidence on the street that yes, the near-term, short-term structure has turned bullish. So I think when the structure turns on the bullish side for the benchmark indices, so we generally see that there is a still room for mid cap and small cap at this juncture. And I think many sectors, as Mr. Bagga has already mentioned about, has shown good traction, like stocks from the defense, railway, even from the oil marketing company, power space. All this space has shown very good buying interest in most of the stocks. So I think it's a broad-based buying action is likely to continue in the coming week. So I think one should stay invested at the current level for near-term to short-term perspective, and possible rally can extend. We may see another 3 to 5% kind of rally in mid-cap as well as in the small cap space.
All right. Coming to you, Mr. Bagga, you mentioned a couple of sectors where you see value in. You mentioned banks, you mentioned pharma as well. Any buy calls coming in from that space, if you will?
I think leading private sector banks, particular stocks, I would not be able to name because of compliance reasons, but leading private sector banks, power finance companies which are financing power and also supplying equipment, creating transmission lines, power producers, are industrials who have really suffered as the government expenditure lagged across last year. Now the order flows are really picking up. I think industrials will do well on that basis. I think these are some of the segments within the market which are looking quite attractive. Real estate has seen a bounce this week again from extremely oversold zones. And we must remember real estate, normally the cycle is multiple years. And right now it is just a 2.5, 3 year cycle post the COVID end that it has taken, starting gaining traction still. I think real estate has a lot more space to run. Cement will recover. Cement, we are seeing pricing coming back, and with more orders coming in, cement should recover. Metals, I was not very positive, but two big things happening. One, the duty protection that the government has brought in. We were disappointed when the duties were cut in the budget. We were really saying, why is this happening when Trump is going to bring tariffs on China and China will dump its excess capacity? So duty coming in on metals is helping. Second, Chinese property market seems to have bottomed out and we could see traction coming in there, along with China's steel makers cutting down their production. So a lot of positives coming in for metals. I think Indian metals will do well in this scenario.
Thanks for that view coming in. And Rajesh, unfortunately, we couldn't, accommodate your picks. We're a little squeezed on the time on the show today. But once again, gentlemen, thank you so much for joining us on the show. That's Rajesh Palvi and Mr. Bagga who've joined us on today's edition of Your Trades. But on that note, we'll wrap it up. It's a goodbye from Ankita, me, and the team that put this show together. Wishing you a happy weekend. Thanks so much for watching.
If you like this video, then like, share and subscribe to ET Now.